Do you need a crystal ball for running your e-commerce business? Hi, I'm Patti Scharf, CPA and partner at Acuity. Today, I'm going to be talking about forecasting for your e-commerce business. What is forecasting? So forecasting is basically a planning tool. You use financial information you have today. You take your knowledge of how your business runs. You use key performance indicators to help you build assumptions on what's going to happen in the future. And you extrapolate that out so that you can predict future performance. All right. Now, of course, things are always going to come up that you didn't plan for, but your forecast should really be a living document. It should be something you're always tweaking and you're adjusting and you're bringing back to being grounded in reality so that as you move through time, you can make good decisions for your business. When it comes to forecasting, you can get super duper granular. You can have massively complex models, everything feeding into other things. Really, the main ones that I think speak to most e-commerce sellers are going to be sales, inventory forecasts, cash flow forecasts, those three. I'm going to talk about sales today, but really they're all so intertwined that you kind of can't do one without any of the others. But I'm going to talk specifically about sales today. So how does forecasting help you? I think the biggest thing that I hear from people who are using their forecasts is if they've got the right metrics and they are looking at things very frequently, like I would say some metrics they're looking at daily, some they're looking at weekly, certainly monthly. It means that they can take the information on what has happened that day or that week and they can pivot quickly. If they see something start to just go off the rails, they can adjust and then improve future performance just by paying attention to what's going on. How do you build a sales forecast? So my biggest recommendation is to just start simple. Use a spreadsheet, Google Sheets or Excel or whatever you're comfortable with. If you aren't comfortable with spreadsheets and you're an e-commerce seller, maybe get comfortable with spreadsheets because this is going to be the best way to just quickly on the fly and at low cost or no cost, be able to put some of your theories to work. All right. There are tons of more robust systems out there. They can get really fancy and maybe someday you can grow to one of those. And I'm actually going to show you one in a couple of weeks that we use here at Acuity. But if you're just starting out and you're trying to understand the concepts of forecasting, just start with a spreadsheet. I'm going to show you one in just a second, just to kind of give you a taste. My next tip is to change and update your forecast as much as you need to change and update your forecast for it to be helpful to you. Last week, we talked about budgeting. You can go see that video here. And I told you that should be set in stone because you're going to be measuring against it so that you can, it's basically your scorecard. But for forecasting, this is supposed to be a helpful tool for you as you plan your future. And as you are adjusting to circumstances, you want to make that kind of a living document so that you're constantly adapting and moving forward with the new plan. Assumptions are everything in forecasting. So you need to be thinking deeply about what is impacting the performance in your business. And when it comes to e-commerce, it's really sales that drives everything else. Sales is going to drive the cost of goods sold. It's going to drive your overhead expenses. It's going to drive shipping costs. It's just going to impact everything that's on your profit and loss statement, ad spend, all of that. So you need to be thinking about what the different levers are in your business and what impacts other things. And then you can start to learn how you tweak those different levers to identify what's going to be giving you the best results. Now I want to pull in a conversation we had a couple of weeks ago about e-commerce analytics. You can go see that video here because that's going to help you identify which of these levers you're going to be using as you're building your financial model. So it could be clicks, it could be website visitors, it could be ad spend. There are just so many different things to choose from. That video will get you started on where you should start looking. But I'm going to throw up a a spreadsheet right here where we can go through kind of a little example so I can show you what I'm talking about. All right, I've got a completely made up, random, not based in reality kind of projection here. So I start out, what we're trying to do is we're trying to predict revenue. Okay, so we've got projected revenue here. I've broken it up between sales on Amazon and sales on Shopify, and then I've also gotten it broken up by month. So I started with this baseline, and I'm just assuming we've got $10,000 of sales in June on Amazon. We've got $5,500 on Shopify for total revenue of $15,500. We want to know what's going to happen in July and August. So the KPIs that I pulled out return on ad spend, and I pulled out the percentage of returning customers. And I, just to make this simple, and you can see how this can get super complicated really fast depending on your business, because you can break it out by SKU, you can break it out by channel, you can whatever. But in this case, I've got the sponsored ads related to Amazon. I've got a returning customer rate also related to Amazon. Google Ads is related to Shopify, and the returning customer rate is also related to Shopify. You may not have these kinds of stats, but again, this is just an example. So the ROAS for sponsored ads is 5. That means if we spend $1,000 on sponsored ads and it has a ROAS of 5, that's going to return $5,000 worth of sales in July. Okay. We're also assuming only 20% of customers are returning. So really this number comes from 20% of 10,000, which is 2,000, plus the 5,000 people we got from the sponsored ads. So that's $7,000 in sales. And then I basically just did the exact same calculation for Shopify to get here. You'll see overall the projected revenue is just slightly higher than this month. Then when we did it again for August, in this case, we're spending $2,000 because, wow, that was such a great payoff. And we did $1,750 here. Same exact thing, and a huge jump in sales. So one of the things I want to point out is because we are relying on assumptions, you have to be really confident in these numbers for this analysis to go well. Otherwise, you can go off the rails really quickly. So let's say return on ad spend was really only 4, a ratio of 4 instead of 5. It's going to have a big impact on the numbers. You might not have enough money left over to spend on all of this ad spend or whatever. Or maybe it's higher. We don't know. But that's the point of this financial modeling, is you start with your set of assumptions and then you can just grow it and you can figure it out from there. Just a few more things to pay attention to while you're building your sales forecast. The first thing is don't neglect to pay attention to the impact on inventory. If your sales are going up, that means you are selling products. So you have to make sure you have enough inventory on hand to fulfill those orders. So again, sales and inventory and cash flow, all very deeply interrelated. We're going to talk more about those later on, but don't forget about those. Another thing, pay attention to the world around you. They have the customer confidence index published. You can pay attention to see how people are feeling based on the products that you're selling. Is that going to be impacted by a downturn in the economy? Is it going to be lifted by an upturn in the economy? These are all things to be paying attention to as you're building your models. Know your customers and build marketing campaigns around when they are ready and willing to buy. I'm a big gardener. I want to hear from people in February or March. I don't want to hear from the seed companies in July. It's too late then. So as you're building your marketing campaigns, include that information in your financial models. I think that's it for today. So I hope you liked this video. If you did, please like, comment, and share. If you haven't already, please subscribe, and I'll catch you later.